Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a kind of review of my $28,447.29 stock portfolio. If you guys are new, this is a weekly kind of series that I do where I break down each one of my holdings, kind of go over why I'm buying it, why I'm holding it, or kind of what my plan is for each stock and how I'm kind of feeling about the market in general. Last week we were up a significant amount more. I believe I was up around $600 in the total gain loss category. Now only up 74.44, but also have I think $202 in dividends year to date. But that kind of balances off because my old account was down year to date. So we can just kind of go off of the total gain loss for now. It doesn't really matter. But going through, you can see that I've added a new stock to the portfolio, and that stock is Apple, ticker symbol AAPL. And, I had made a video before when I had first started kind of this portfolio analysis, and Apple was in my stock portfolio, I believe, and I sold it at around 264, I think, or 260. Because I felt like there wasn't enough growth there to justify the valuation for Apple. I felt like it was really kind of the least potential for growth out of like the Mag 7, other than Tesla, of course. But like out of the big tech companies, I felt like it was kind of the biggest. So it was the most reliable. And it was very much kind of a value play, but I felt like the price tag on it was way too high and it was too good of an opportunity to get out and buy something else like an Amazon or a Microsoft. So I had got out before and now I'm back into Apple. I've picked up 3 shares. I plan to incrementally kind of add the shares. And my reason for that is, guys, I think that there's a really good opportunity here because you pretty much reliably know that the smartphone sales are going to be good. I mean, if you really think that the tariff stuff is going to be worse than what's being priced in, then obviously you can wait on the sidelines to buy Apple later. I'm of the opinion that we're going to eventually get out of this, and I think that Apple is going to be an excellent investment for the long term, especially when the 52-week high is in the 260s and we're now trading below $200. I'm really a believer that Apple will hit its 52-week high again. I think that there will be growth. I think that this is a really good time to be getting in because the sentiment everywhere is that it will never get better. And if you guys have watched some of the interviews for the Worldwide Developer Conference or just some other interviews with a lot of the developers of Apple, they're kind of saying that they want to develop the technology that makes sense for them and the type of technology that makes sense for their company and what they understand. And when management has a good circle of competency, that is a very positive thing as an investor. And I think a lot of companies that we're seeing now are getting too much into the crypto craze or the AI craze or whatever's the new hot thing instead of actually researching what will make sense for their company and implementing that. And I think that we have a lot of kind of just surprise upsides on Apple. I mean, the bar is so low now, and I feel like we really kind of need events like this and companies like Apple and companies like Salesforce to kind of get rid of the people who are only in it when times are good. If you want to be a long-term investor in something, it has to kind of hurt a little bit, and you have to be willing to go through bad years sometimes, bad quarters, bad years, bad decades even at some points for some of these tech companies. So I really think that Apple's an interesting position. It's a position that I want to hold, and I'd like to get my amount to around the $5,000 range. I currently have about $600 worth with 3 shares. Going to incrementally add to this. I kind of have a strategy now for how I'm going to be investing pretty incrementally and adding to my positions in a more reliable rate, but going to continually be buying Apple for each one of these weekly reviews and kind of beefing up that position because I think it's a really cheap price right now, especially if you're planning to hold for the long term. Next up, we have Hasbro, ticker symbol Hasbro. Currently up 3.42% on this stock. not including dividend payments. Currently have about 17.468 shares, or a value of $1,184.52, and it also pays me an annual dividend of $48.91. Now, this is probably the one stock in my overall portfolio that I have gotten the most crap for, gotten the most ridicule over, and people have been the most mad about me owning. And that, of course, is Hasbro. As you guys know, I'm a big believer, especially if you guys have like looked into this, even just start researching it because it's insane. The Final Fantasy drop for Magic of the Gathering has been huge. That is obviously the biggest part of Hasbro. I think that this is going to continually increase the amount of value, and I am in Hasbro for as long as there is a big bull market in the card kind of ecosystem. Once I see things start to fall in the card ecosystem, I'm probably going to exit Hasbro. Maybe I'll hold for the long term, but I really think that this is something that is not being factored into the stock. I think it's definitely worth looking into. I think that the sales of Magic the Gathering are going to be insane. They're trending upward, and everything is going up in value. I really think that that's going to greatly benefit Hasbro. When you literally have a collector box of 12 booster cards in a box for Final Fantasy sealed, selling for more than the newest PlayStation, you know that you have a good product. I think that they're going to continue to increase in value. I think that Hasbro is being undervalued, rightfully so, because management has been very poor. The other products that aren't Magic the Gathering are not very good. The tariffs are definitely not a plus, but I do think that there is good margin when things start to improve, and I do think that things will eventually improve. And I also think that Magic the Gathering is not being factored in to Hasbro's overall value, and I think there's a lot of value there. Next up is the highest increased position in the portfolio, Meta Platforms, ticker symbol Meta, of course. Currently, the value of this holding is $1,366.88. Currently up $247.08 on that, or 22.06%. Obviously, this is the highest percentage increase of a stock that I've gotten in. I was very fortunate to pick up one share at $484. Continue to hold, but very volatile stock. Actually sold one share and bought my Hasbro kind of position with that, along with $350 of cash injected into the portfolio. But Meta overall, I think, is really going to benefit from any kind of ad-related things that AI can do, any kind of advertising that can increase the value of advertising on their platform. But I also think that you have the kind of upside of if they get the AI right. And I think Zuckerberg is really, really focused on getting the AI portion of this right. I think that they have the best data training models, and I think that they're a very strong business going into the future that's going to make a lot of money going forward. Next up, we have Prologis, ticker symbol PLD. And this is a triple net real estate investment trust that specifically owns warehouse logistical REITs, or warehouse logistical real estate, sorry. And so basically they own a lot of warehouses that are for logistics, and they rent those out, and whoever's renting it from them has to pay all of the taxes, basically every single expense that goes on the property. So it's just a very good business that brings in a lot of cash flow. It usually trades around the, I would say, the $100 to $120 range. It's traded anywhere from in there. Whenever it goes down to like sub 100s, I always pick it up, but even 102, even here, I could see myself picking it up just because there's a good dividend yield. I like the future of the business. I think it's a good business. I think real estate is going to continue to perform pretty well, especially real estate like this, where there's not as much of a history of tenant default. So overall, I think this is a pretty good business. Happy to owning it for the long term and just collecting that nice fat dividend. Next up, we have Texas Roadhouse, ticker symbol TXRH, and This is just flopped because the CFO decided to leave. Also, fun fact about this company, guys, that I did not know. Texas Roadhouse is headquartered in Kentucky. Did you guys know that? I mean, I thought that was kind of a crazy fact. But anyways, current value of this position is $1,978.54. I'm currently down $23.84 on this, or 1.19%. I think that this is a good buying opportunity here. Again, none of this is financial advice. I'm not a financial advisor. But for the amount of growth that you're getting in this stock, I really think too, you can't beat the sit down experience right now compared to fast food. It's so much nicer. You really get so much more value for your dollar, even though it's a little bit more than fast food. The actual experience you get, I think that Texas Roadhouse is very efficient. The most important thing for this play, though, I think, is just the fact that they can open new restaurants and they can acquire more of the restaurants for the corporate side. As long as the corporate side can increase the amount of revenue that they're making, I think that this is a wonderful business, and I think that they have a lot more room for them to grow and for them to succeed. So I'm very happy to kind of get to see that. Next up, we have American Express, ticker symbol AXP. This stock is currently up 3.53%, or $89.74, for a current value of $2,632.24. Not really much to say about this, just overall I think a great business. I've been saying it for a while, even last week when it was over 300. I said if this is under 300, I really like it. I know that it seems like it's overvalued for what it is, but sometimes you have to pay, a little bit more of a premium to get the type of business that you want that's really reliable and really a very strong business. It's going to be able to weather a lot of storms and really be very monopolistic. I mean, you really think about American Express and Visa, they're very monopolistic types of businesses. They're really the only ones in their industry. They're able to make a ridiculous amount of money and increase that amount of money consistently every single year. It's not amazing growth, but it's consistent good growth. That's the type of business that I want more of in my portfolio, which is why we're moving on to the next business in the portfolio, Waste Management, ticker symbol WM. Currently, it has a value of $2,648.68. I'm up $202.13, or 8.26%. Currently pays me an estimated annual income of $36.96. So I really like this business for a lot of reasons. Kind of the same reasons I was talking about with American Express. I realized it was a very good business kind of transition off of, and I think that Waste Management is a wonderful business that, I have to say I hate it. I hate the price. I hate that I didn't buy more. I thought I was really, getting destroyed and getting a bad deal when I was paying $224 for a share a couple of weeks ago. Now I wish it would go back into the 220s, but I don't think it's going there. I think you need to own a substantial amount of some kind of waste disposal or some kind of electric or some kind of business that can weather a lot of economic storms and provide good returns. And Waste Management was one of those businesses that can provide great returns over the long period. So I still think I'm going to continue to buy some shares here, just because I want to build up a big position. I don't want to sit on the sidelines and wait for this business to get hit down. If it comes back down, I'll have more cash I'll be able to deploy to buy more. But this is the type of business that I really want to own for the long term, because I think that it's going to be able to continue to pay a higher dividend, which is something that I really like. But more importantly, it's going to be able to continue to compound the revenue over time in a very consistent manner. It's very insulated from a lot of political events, which is why I really like it. I like Apple more here for the opposite reason. I think it's being very hit by a lot of unfortunate political events and a lot of other unfortunate events that just kind of happened. I think that were outside of management's control. And I still really like the business of Apple. And if you noticed, what they've really been doing too is reducing the total number of shares outstanding. So I like Waste Management. I want to add a little bit more of it, but I would much rather have companies like Apple that have really been hit hard off their 52-week highs that people have a lot of doubt for, because I think that those businesses have a lot further that they can go up. So I do just want to kind of give that as a disclaimer. I would rather buy Apple here than Waste Management, but I've been kind of putting off Waste Management, adding more of it for a long time. I think it's one of the best companies overall in my portfolio, and I do think that quality is something that's very valuable and something that you should consistently invest in. But I do really like stocks that have been hit very hard, especially when they're as high quality as Apple, because not to get too sidetracked, but I do want to talk to you guys about this because I don't know how long you guys have been investors, but it seems like pre-COVID, and maybe I could make like a separate video on this, just kind of talking about this because I don't know how to really put it into words very well. But it seemed like pre-COVID, everyone loved Apple. Apple was the greatest company ever. You just bought Apple. You didn't buy the S&P. You didn't think about it. You just bought Apple, and Apple had better returns. So I really wonder if Apple has just been sitting back, and I don't know. It just feels like I don't know what happened during that time from post-COVID. You know what I think it is? I think the supply chain stuff kind of started happening, and then it was just kind of downhill from there. Like they just kept, it just feels like they've had a lot of unfortunate events, but I still think it's a very powerful business. And I do think that there's a significant amount of value and growth there to be had in Apple. And I don't know, guys. It's just weird because it's so weird being someone who's been involved with investing for a while and seeing like how much hate Apple's getting right now when I remember how much everyone loved this stock. You paid a big premium for this stock. I mean, this was Apple. This was, in my eyes, for a long time, I always saw Apple as being kind of superior to Microsoft as an investment. Just because of the amount of growth. Like, I thought Apple was clear in a way, like the best company you could invest in for a long time. And that was kind of pre-NVIDIA with the jumps that they've had, but I really think that Apple's been beat up. I think that they're actually going to come back. Sorry to get sidetracked again. It's just really amazing to me how far Apple has fallen. But the next company that has also fallen pretty far but has bounced back in pretty decent ways, which I've talked about, is Amazon, ticker symbol AMZN. This company obviously up 3.86% from where I bought, or $154.40. So a little worse than last week, but not too bad. Shares at 212.10. Again, I think that they're going to eventually hit their 52-week high, and I'm just sitting back and waiting for that moment. I'm probably not going to sell into that. I'm going to continue to hold, but I've been saying that at 200. I think that you could still buy at 212 and be happy. I think Amazon's really, really undervalued for what it is. Everything's being built off of AWS. They have a million different vectors of growth, and they have very sustainable, reliable revenue coming in that they're able to use to fund all of these high growth projects. I think that this is an amazing company. I think that a lot of people are not looking at it because it's not as flashy. It doesn't have as many headlines. It's not as cool. But what they're doing is they're taking over industries and they're monopolizing, and they are just an amazing business to be in. So that's kind of my 2 cents on Amazon. Next up is Vici, ticker symbol Vici. This is a triple net real estate investment trust, just like Prologis. So they own about half of the Las Vegas Strip's physical real estate, so they don't own the rights to run the casinos, but they own the casino buildings. The casino operators pay all the expenses. Like I said, it's kind of same thing as Prologis. They just collect the income. And as long as casinos continue to make money in Las Vegas, Vici continues to pay me a good dividend. That's kind of the only risk. And I like being on the side of the house, especially when it's not the profit of the house. It's just the house's ability to pay its rent. And I think that most casinos can afford to pay their rent. So Really like this business, up again 1.86%, but also have that massive $309.01 in estimated annual income. So really happy to be an investor in Vici. Going to continue to buy shares, want to increase that estimated annual income. My rule on the channel has generally been every time it dips below 30, but I think we might not be seeing that again. Stay tuned, ladies and gentlemen. I mean, it's going to be interesting. I don't know exactly what's going to happen into the future, but I'm just kind of hoping to buy more Apple and other different companies, and I'm just hoping it doesn't jump too much so that I can buy more for less. I haven't been, I've been reading the news obviously, but I haven't been too concerned about it. I think everything will get settled and we'll be okay, because that's how it usually ends up going. And on that happy note, the last stock in my portfolio is Salesforce, ticker symbol CRM. Currently down $774.42 or 10.65%. Ladies and gentlemen, I still think that this is an amazing opportunity. I think that this is a very strong business. I think it's a very similar story to Apple. I think that this could be one of the great tech businesses, and I'm going to continue to sit here with my bags, and I'm going to continue to throw more money into it. I think that Salesforce is an amazing business. I think that the quarter that they just had was very good. I think that anything they do for some reason just makes the investors angry, so let them leave. I'm going to stay patient, and I'm going to take their money when they come back because they realize the mistake that they've made. Once Salesforce blows out earnings, once more people are wanting to get into Salesforce, once they see that Agentforce is going to make a lot of these redundant tasks obsolete and save businesses a ridiculous amount of money, once they see the network effects that kind of consistently keep certain customers in, which feeds them more money, which allows them to improve the product, which allows more customers to come in. The whole Salesforce ecosystem as a whole is just getting bigger and bigger. The business should be becoming more valuable and more valuable, but because we don't have double-digit growth in the revenue and there's acquisitions going on, that makes sense. Wall Street just gets mad. So kind of the lesson to be learned overall in investing, if you're just, regular Joe Schmo and you have a lot of time on your hands, look for the businesses that you believe have been unjustly hit on their valuation side and buy those. Because in the long term, Salesforce is going to continue to increase their revenue over time, and the stock is going to have to increase in value if they continue to make more money over time. It doesn't make sense that it wouldn't, and I believe that this is a really attractive price for what you're getting. I think that there's a lot of uncertainty in the markets, but I do think that everything will correct eventually, and we're going to have a big bear or bull, not big bear, big bull market. But let me know what you guys think in the comments section down below. I'm really interested to hear what you guys have to say about this. Overall, I'm just going to keep continuing to pretty much put some money in every single week, increase my holdings. Don't expect too many uploads on the channel. I've just got a lot of stuff going on. Next month should be better, and then it should continue to get better over time. But yeah, I really appreciate you guys sticking around and watching the video. Thank you for watching. Have a great rest of your night, and goodbye.